The broadcast is now starting. All attendees are in listen-only mode.
Oh, don't forget the recording, Rob. Good morning, everybody. It's Wednesday, October 17th. And we did bounce up from yesterday's action there. That was a really decent bounce. I actually didn't do that great yesterday. I did better last week. And today I'm up a little bit, so I'm just going to go flat here soon because it looked like resistance area. Same, we were just looking at it with Rob. Similar area. I'm on RTY trade, but very similar to what's happening with the other charts. Go ahead, Rob, whenever you're ready.
All right, thank you, Frank. Welcome, everyone. Glad to see you guys joining us for another Wednesday webinar. As Frank mentioned, we had a really nice day in the markets yesterday. You can see I got a nice little circle on my chart. We'll discuss that in a second. As usual, we're going to go ahead and cover the four major market ETFs. We're going to look at the S&P 500, the Dow Jones, the NASDAQ Composite, and the Russell 2000. And once we are finished with that, we will take a look at quick look at the U.S. dollar, look at commodities, gold, silver, oil, and then we'll look at some chart requests. For those of you that are new here, my name is Stock Darts. The other person that was talking, Frank, is Stock Guy 22. And you can follow us on Twitter at Stock Darts or Stock Guy 22. We're also under YouTube under the same name. And then you can find myself and some of my trade ideas at patreon.com/StockDarts. I like to post a lot of different trade ideas and a lot of videos on there. And if you have any interest in or you like what you see today, feel free to go on over there and take a look and see if you like what's there. A lot of that stuff is behind a subscription level, but it's only $8 a month, and most of that stuff I've set it up now so that after 3 days it turns to free, so you could take a look at some outdated content if that is just to see what's behind there. But I think for the price of $8 you get a tremendous amount of value. You get at least 2 or 3 trades a week, and one trade basically pretty much pays for almost your entire year if it's a good trade, and we've had a lot of good trades throughout the last couple months in there. So here's the S&P 500, and there's a circle here. Now, the reason that circle is there is because we were discussing it yesterday in our Discord. Also, if you guys aren't on our Discord, feel free to ask, and we can give you a link for that. It's a free chat that Frank and I host, and we discuss trades throughout the day. Now, mostly at the moment, it's a lot of future stuff, but we discuss stocks whenever someone has a question or wants to know something, or whenever there's a theme that we're looking at. But nothing to lose. And like I said yesterday, we were discussing the markets, and early in the day, when we had just opened and we were maybe a half hour into the day, we were still trading somewhere around 277.50, 278. And I mentioned, as long as we can sort of stabilize and close strong and hold above that level, that I think we're good. I think we maybe established a bottom in the market, and that's clearly what happened as we ramped up and just trended up the entire day. And I think this is what Frank was mentioning yesterday. And here, yesterday is basically, this is yesterday, this box, right? And as you can see, sometimes this is difficult as a day trader, because if you don't get long right away and you don't sort of follow the trend, it becomes difficult to get some entry points, because for the most part, trend days like this are pretty rare, and it's difficult to chase the action higher once it starts to really ramp up, because for the in a normal day, you'll usually play a regression or reversion to the mean play. That wasn't the case yesterday, right? It was just basically straight up, almost all the way up to the very end. And it showed that there was a lot of buyers that came in that have been waiting for a bounce or waiting for a bottom. And I think that with the bottom, or with the move that we had yesterday, I think at this point we could say we've probably hit a short-term bottom in the markets. And I would even say probably intermediate term. And to me, this is pretty analogous to what we saw earlier in the year, right? Where we opened up the year very strong, and then we had a strong sell-off at the end of January and into February. And once we hit that bottom, we had some nice display of buying. And even though we came back and revisited that, we never really lost it. And it eventually set up a nice base and turned into the really strong rally that we've had throughout most of 2018, right? Once we hit about April, we've basically been steadily climbing higher. And as you can see, as we started to really climb into the last couple of months, you can notice it on this channel. The action is pretty much reserved for the top half of the channel, not the bottom, showing that we were starting to reach a point where sellers had pretty little impact on the market. And as that happens, you start to get an imbalance growing between buyers and sellers. And as that imbalance grows, you start to reach a point where there's a lot more potential for a stronger downside move, because the hands that keep chasing this, the people that keep trying to buy at highs, are the ones that are going to be quicker to dump it. And eventually that's what happened. We sort of hit a critical mass where there just weren't enough buyers with resolve to push through the selling and the supply that we encountered up here at the 290 area, 290, 292, 293. And that's why we had this big sell-off. Now, we found some buyers, right? We found a pretty decent clump of buyers here, 272. And then particularly at 275 to 278, 279, we found a lot of strong buyers yesterday. Will this hold? Like I said, I think it will. I think 270 will hold for now. Are we ready to make our way back up to 290? Most likely not. I think that what we've done now is very similar, again, as I mentioned, to what we saw in February, which I think is going to play out in a very similar fashion. We're probably going to try to push higher. I don't see us breaking 286. I think 286 is going to be a pretty stiff wall of resistance. You can see that's where the selling really accelerated. And where we really took a turn south. And I think it's gonna take us a while to get back above that. I think if we continue to make our way up to that point, that's a really good spot to go ahead and short, or to just go ahead and take profits and wait. Now, there's probably a decent chance that we sort of stall out here and print a consolidation range, something between the 200 and today's highs. I think makes sense from here to next Wednesday. And we sort of play between there, and then probably try to make a move back to 286 or make a move back down to 270. I think that we're still right in the middle of that spot, and there's always the potential that this is sort of a dead cat bounce. I don't think that's the case, because we're still overall in a pretty strong bull market. Right? If you take a look at what's going on, I think dead cat bounce is not really a term that we should consider that much, because in the intermediate to long term, we're in a very strong bull market, and we had a pretty strong sell-off, and we were able to push through that and build upon it and get higher. And I think that at this point, we're still in the point of just establishing a broad range for the year, right? And I think that was the theory to start the year, and it's been the theory for the most part. While we have been pushing up to new highs, for the most part, we've been trading in a pretty broad range. And we're in the middle of that range. And typically what happens when you hit the middle of the range is you sort of go back and forth between it and then try to make a move higher. And then if you fail, then you go ahead and start to explore the bottom of that range. Now, it's not always the case, right? There's always the potential that we do continue to drop further. But I think if that happens, we're likely to see a few more days here before we try to roll back over. Again, because of the nature of the buying that we've seen the last couple of days, I think that the market has found buyers, and at least at this point wants to see how far they want to take it before they want to get rid of their shares. And so for now, my expectation from here to next Wednesday is that we will try to keep pushing higher, probably fail and stall out, but not really come down and probe those lows yet. I think that at this point, we want to establish price above the 200 and make our way back up and test the 20 period, the 50 period, and this 286 area that's kind of critical. So I think that's the next step in this cycle of buying, is to make our way back up there. But I don't think it's going to happen right away. I think there's going to be an interruption here where we have to stall out and spend a few days really testing and probing through this 280 area, and maybe even coming back down and retesting 276 to make sure that we want to stay above the 200. So I think the more likely scenario, as I mentioned a second ago, is that we sort of go between 276 and 280 over the next few days and really try to establish the price action above 276, and then from there move beyond there and start to make our way back up. Now, a case could be made that with today's long wick that we already tried to test the 200 and immediately it was bought up. Right? If we go to a 5-minute candle again. You can see we opened up today and we just sold straight down to about 277.50. And then from there, immediately we found buying. And we kind of ramped all the way back up to the highs and are now beginning to set up to push past it, right? So there is the chance that this was the test of the 200-period moving average, and we actually bought even before it, showing that the buyers are ready to kind of move forward. And if that's the case, a lot like yesterday, let's see how we close. If we can establish price action above the level that we're at right now and start to make our way up to 281, 282, well then maybe we continue all the way up to 286 without the need for that pause. I think that we probably need that pause, and I think we need a more substantial test of that range. It was basically the dotted line I drew yesterday, right here. I feel that we need a little bit more of a test of that range. But throughout the year, this market has done a good job of surprising to the upside and really climbing higher when traders are not expecting the move that quickly, right? So there's always a chance that we continue to push upwards and make our way back up to 286. I would be shocked if we're able to push past 286 anytime in the next few weeks. I think that that's going to be a pretty strong wall. But I think 280 is an intermediate level that I expect us to stall out at. But you never know. We could push right through it, right? And if that happens, then we will continue to push past that. Now, what does this mean as far as how you should be trading? As most of you guys know, a lot of times when I give this advice on the S&P 500 or the NASDAQ, I don't necessarily mean it from the perspective of trading SPY or trading IWM or trading the Qs. Usually what I mean is, or what I'm trying to get at here, is try to understand what kind of environment we're in to try to figure out what kind of trades we should be taking, right? And the way I look at it right now is I think that we have established a bottom and we should be looking at buying the dip plays now. We should be looking at plays that are at support, ready to break out. Maybe not necessarily plays like the S&P 500 that have already kind of moved up. If you really look at it from a perspective of just looking at the daily chart, the S&P 500 does not make sense as a long trade. It's at 280. You could say that the only real substantial stop we have is 270. If you want to be more aggressive, you could use 276 as stop, but that's still about 3 to 4 points away. And we have maybe 5 or 6 points of upside. So it's almost 2 to 1 risk reward. But I think the risk reward could be a lot better if you find other plays that are still in pretty tight levels or pretty tight ranges and in better consolidation patterns than this. But when we look at something like this, what it shows is that we have buyers that are coming back in, which means there should be names that are moving back up. And that's what we should be looking at, is looking for names that are making their way back up and starting to bounce. The play that I mentioned on Monday on the Patreon page is doing very well for us. And I think this was what we wanted to see, right? If the markets are going to bounce, we want to find charts that aren't at bottom, aren't at lows. We want relative strength, and we want them at points where we have very, very tight risk reward, because there's always a potential for a surprise to the downside. We've had a lot of selling, and I don't know that we're done with that selling yet. So we want to have our trades with easy stops, right? And you can see on Monday, Monday was the 15th, right? So on Monday we were printing this tight hammer, and I mentioned, look, as long as this stays above 174 and we start to get a bounce above it and confirm support, then I think this is a good trade. And that's what basically happened yesterday. As we started to find buyers in the markets, well, the rest of the names start to come back up, and we start to make our way upwards, and this trades up very nicely over the last couple of days without having to really put yourself in a position where you're in danger, unlike maybe if you tried to take a SPY trade where your stop is way down here and you're underneath the 200-period moving average and there isn't any real discernible level of support to hang your hat on as far as trend lines go, other than the opening range of the year, right? And so even though we're looking at the S&P 500 and analyzing it, understand that what we're really trying to do is analyze what environment we're in and what kind of trades are going to work. And I think at the moment, there's more potential for a move up to 286 or for us to sort of stabilize between 280 and 276. So at the moment, I think it's bullish. There is, of course, this lower chance potential that we come all the way back down to 270. And if that's the case, well, then if you have long plays you're looking at, they won't even trigger. And if that's the case, then you just wait patiently for support, and then you look for charts that are setting up. But I think that we have hit by the dip area, or by the dip environment, rather than what we were last week, where we were just waiting. Last week, my advice for the most part was, let's just wait. Let's see how far we're going to drop. Let's see where we stabilize, and then from there we can start to figure out what we want to do next. And I think we've reached the point where we want to start looking at buying some dips. I think we still need to be pretty cautious, despite the fact that I think we've bottomed. It's not conclusive, and there is potential for us to just drop all the way back down. If we close weak today and close somewhere below 278 to 277, then there's a very strong chance that we test the 200 and possibly probe below it. And if that's the case, a lot of names are going to do poorly. So I think we don't want to go crazy buying right now. I don't think we've hit any kind of a major bottom that we can sort of decidedly say, yes, for sure we're going up. But I do think that we've probably bottomed out. And if we come back and test it, we will probably find buyers there again. And then once we maybe tested it a couple times, then we could say something along the lines of what we said in April, which is, all right, we're ready to really start to make our way upwards. I think at this point, the only thing we could say is we're probably ready to start trading sideways. And I think that's going to be the case probably for at least the rest of October, is that we trade sideways. Now, the sideways can be this, or the sideways can be this. But I think that for the most part, we're not coming back to highs. I think we're going to chop back and forth in between certain levels. And for the moment, it's really a matter of figuring out what those levels are going to be, and where we can establish a ceiling and a floor to go ahead and play a little bit more aggressively. But for now, we want to be cautious. We don't want to discount the fact that we can go higher. And so we're still looking at some names to go ahead and take to the long side along the S&P 500. Now, if we look at the NASDAQ, you'll notice the NASDAQ, very similar to the S&P 500. We dipped below the 200. It was temporary. We had a real strong day yesterday and today. Also got above a pretty clear level and have made our way back up. Last week we discussed potential levels that we could drop, right? And I thought 178 was a pretty good level, and that the major level was 171. I didn't think we were going to get below 171. I was a little bit wrong on that, because we did drop below it, but we did find some strong buying, and we're able to get back above that. Notice, by the way, again, the huge volume spike. The huge volume spike that we had, very similar again to what we saw in February. Hopefully meaning that we are at least halfway through a capitulation phase. A lot of times what happens with these huge volume spikes is you'll establish a bottom off of a big volume, you'll make your way upwards, and eventually you come back and retest it, and then you retest it on lower volume, showing that there's not quite as much emotion, and there's not as much panic the second time as the first time. And then often from there, that's what you need to sort of start climbing your way out of that and sort of complete the bottoming process, right? And so that's one of the reasons I think that we still have more time needed to work through the selling pressure. A lot of times when you have this kind of explosive down move, it's not gonna be sort of it's not going to culminate in just one quick bounce, like a V bounce. That can happen sometimes, but more often than not, when you have this sort of a strong move to the downside, it's going to take a few tries before you can really stabilize and start making your way back to highs. So again, I think the prevailing theory here is that we're going to trade sideways, despite how strong yesterday was, and today's been pretty strong as well. Maybe not in the NASDAQ as much as the S&P 500, but overall we're still seeing strong buying today. But I think despite that, I think we're getting close to probably the ceiling, the near-term ceiling of price action, and I think we should probably head back and test some of these levels that we blew through yesterday over the next couple of days. Now, as I mentioned last week, 178 I thought would be a good floor. The fact that we're below it means it probably becomes a pretty good ceiling. You can see that we are a little bit ahead of the curve as opposed to the S&P 500, in that we've already hit the resistance level where we started to really accelerate to the downside. Again, the S&P 500, if we take a look at it, we really exploded to the downside on the 10th, right? And we're not really there yet. There's a lot of room to go to reach that level. We're also at the bottom or below this channel. So relatively speaking, a lot more weakness in the S&P 500 than there is on the Qs. What symbol are you talking about, Ray? And you'll notice on the Qs, that we are already up to where we broke down from, right? And we're above this trend line that we can sort of extrapolate from the early bounce that we had in February and through March and April. So overall, relatively speaking, the Nasdaq and the names in the Qs are stronger than what we're seeing out of the S&P 500. So if you're looking for names that you want to play a bounce play, well, the Nasdaq's a decent area to look at, right? And it's doing better than the S&P 500. It's doing better than the small caps. However, the Dow Jones, I believe, is still, relatively speaking, stronger, but we'll take a look at them next. Now, the likely scenario, if things play out the way they're supposed to with it from a technical perspective, is that we stall out and we test and we probe between the 200 and this 178 level. Now, this is actually a pretty interesting chart in that if we can establish price action above 178 today, if we close strongly and can get back above that level, well, that probably bodes well for the S&P 500, and that probably bodes well for some of the other indices, because it shows that we are pulling past this big breakdown that we had. What was that? That was actually last Wednesday. That means that we're ready to kind of push past that big breakdown that we had on Wednesday and make our way back up towards the 20 period, the 50 period, and not necessarily get back to highs, but at least show that, well, yeah, we did bottom, and we're not really going to come back and retest that anytime soon. We want to make our way higher. Now, again, I think regardless, even if we do get past that level, we'll probably stall out at the 2050 and come back and retest some lower levels. But I think with the Qs in particular, as long as we could stay above the 200-period moving average, as long as we could sort of maintain this upwards trajectory and maybe sort of keep this trend line more intact, well, then things aren't quite that bad. Maybe we still set up for a Christmas rally and try to make our way back to highs. But I think for now, again, the likely scenario is that we stay here. Or if it's really bullish today, maybe we trade something like this. But I think that we're likely to find some resistance pretty soon. And these ads are unreal how much they show up. And as long as we stay in that range, again, we should be looking at names that are sort of in the same point. They're stabilizing and they're ready to bounce and start to make their way higher. Ray, again, I'm not sure what question you're asking there. You said, what is the symbol? If you're talking about the Qs that I'm looking at, the S&P 500, or if you were looking at something else. Next up, let's take a look at the Dow Jones. And so here's a chart of the Dow. Now, relatively speaking, over the last few days, the Nasdaq is stronger, right? Again, take a look at where we opened last week on Wednesday and look at where we are now, right? So nowhere near that major, where the selling really escalated. Now, that being said, the Dow Jones had held up very, very strongly before Wednesday and had done a very good job of resisting the selling up to that point. But then once that happened, it just really cratered like everything else. Now, this green trend line, it's pretty interesting because if we go back quite a bit, all the way back to 2016, the Dow Jones has actually still maintained a pretty stable trend. And despite the fact that we've peaked below it a few times, including throughout this week, it's back above it, and it's holding steady, and it's still trying to climb, right? So I think until we lose this trend, we can still assume that there's going to be some bullish echoes in the market, and there are going to be traders still trying to buy it. Now, I think this trend's getting very long in the tooth, and I think that it's probably close to ending. I don't think that means it's a market top. I think it means more than anything that this broad range just needs to extend further and trade sideways and build a much more substantial base, very similar to what we saw in 2015 through 2017 almost, where we just traded sideways in the markets. And I mean, ultimately it could be a top, but I think it's very early to say that. I think at this point it would just be a matter of a base that we figure out whether we're going to resolve up or down on. Now that's, even as the talk of the base is a little early, because for now this trend is still pretty much intact. Again, as long as that green trend line is pointed up, then the market is going to be looking upwards. Now, as far as what we can expect out of the Dow Jones over the next couple of days, you'll notice again the 20 and the 50 are actually still aligned in a bullish nature. The 20 is still above the 50 is still above the 200. You'll notice on the Nasdaq, it already crossed the 20s below it. On the S&P 500, it was the same deal, where they're already rolling over, coming down to meet price. And with the Dow Jones, we're still actually holding pretty steady. Now it's likely coming pretty soon where the 20 is going to cross the 50. But for now, it's pretty. The price action is pretty stable here, and more likely than not, price is going to come up to try to test those moving averages, and then again, probably trade somewhere in here and stabilize over the next week or so. So it's the same situation as the other two indices, where more likely than not, we found buyers, and now it's a point of getting some consolidation as these buyers take profits and trying to figure out where we go from after that stage. And I think that's the next step. Okay. Now, our last one is IWM. Now, IWM, of course, has been the weakest by a long shot. We found a floor here at 150 to 152, 153. And we found buyers, just like the other two. You'll notice, again, we're not up to last Wednesday's open. We're still here trying to hit the 200-pair moving average. But we did find a floor at the opening range for the year, which is strong. And I think this is by far the most negative picture we have on the market. We're below this range that we spent the second half of 2018 pretty much in. Which shows that we've lost a lot of ground. And we're back at the opening range. And more likely than not, we're going to stall out at 160 and come back and retest the opening range again, right? So a lot of weaknesses come into IWM. And I think, again, if you're looking at trade names, you probably want to be looking at the NASDAQ or the Dow names or some other pockets of strength, like maybe oil names that we were discussing last week, rather than looking at small caps and looking for aggressive bounces. I think the small caps are still the weakest, and I think they're still in a position to be the first to sell off once we start probing lower and trying to retest some of these levels. You'll notice we're firmly established below the 200-pair moving average with room to go to even come up and test it. So again, I think this is probably the weakest. Well, it's obviously the weakest of the four indices, and it's probably the area we want to be the least involved in right now as far as looking at trades. I think we want to stick to safer names right now and make sure that we aren't really pushing the envelope as far as trying to get overly aggressive. Now, as far as what levels we can expect, I think we can probably expect price to stay above 154 and certainly below 161 from here to next Wednesday, and probably just sort of trade sideways and probably even come back down and retest some of these mid 150s from here to next Wednesday. Now, one other point I do want to bring up is it is earnings season, right? We had IBM and Netflix report yesterday, two of the bigger names from yesterday. IBM gapped down pretty strongly and is having a bad day today. And Netflix was moderately up, at least as far as Netflix is concerned. It gapped up to about 375, and it's down to about 350, 360. The reason I bring this up is because it's important that whatever names you're going to look at to trade in the next couple of weeks, that you understand or you figure out whether you want to trade this through earnings or not, right? If you're swing trading based off of technical analysis and looking at a chart, more likely than not, you want to avoid earnings altogether. If you're like me, you like to trade options, then you can target earnings trades because they are pretty loosely correlated with the markets. A lot of times, the market's not going to have much of an impact on a name on their earnings report day if they have a good report earnings. They're going to do their own thing for that day because that's going to overshadow whatever impact the market has on it. And for those of you that are regulars, I have an earnings workshop. I've had one pretty much for every quarter almost for the last 4 or 5 years now. Not really sure how to go ahead and proceed with it these last couple of quarters since I moved on to Patreon, and while I wait for Frank to set up Stock Guy 22, I've had some difficulty with it. But if you are interested in more earnings trades, just contact me and we could do something privately until we can establish the Stock Guy 22 site again. I will share, for those of you that are in here that are Patreon members, I will try to share a couple of trades a week, or maybe one trade a week that I find that's useful. I was going to do that with Netflix yesterday, but I actually did not like the volatility on Netflix. I thought that there was too much priced in. I had close to 10% IV, which is typically around what it moves, so it wasn't really at a spot where it was worth the trade, and that looks that instinct looks like it proved right. But I will be looking at some names over the course of the next week. I'm still going to be trading a lot of them, and if you're interested in trading them, feel free to message me on Twitter. You can email me, stockdarts@gmail.com. You can message me on Patreon, on our Discord, and we'll see if we could do something private where I share my spreadsheet with you and share my plays. But that out of the way, if you are looking to trade, make sure you understand what the earnings date is on a name and what the risk is involved if you try to trade through it. I think it's usually a poor idea to try to hold a name through earnings if you're just trading directionally as a normal swing trade. Okay. Let's take a look at the U.S. dollar. We'll look at it, how it has behaved. It is on the bottom side of this trend line, but I think overall it's still in the same trajectory and still just sort of making its way sort of upwards, but really starting to stabilize and trade sideways. I think over the course of the last, it's hard to really draw a box here, but I would say over the last few months it's really just been ranging sideways and is sort of towards the top of that range. We had a bounce today. And it looks like it wants to maybe come up and retest the top of this. But I would say it's kind of stuck range bound. And interestingly enough, we have sort of a mixed bag when we take a look at the three crosses I like to look at. If we look at the euro versus the US dollar, it's been trying to stabilize and build a bottom here. As of today, it's starting to lose that bottom, but it hasn't quite reached that point yet, right? I think even if we lose 115, we can come down and we can still look at 114 as a stable bottom or attempt at a bottom. However, this is decidedly bullish for the U.S. dollar if we lose 115. And again, there's time for this to get its act together and maintain this flag. But right now, it looks like the euro is starting to lose traction and starting to look like it maybe wants to head lower. And this would be a net bullish for the U.S. dollar and bearish for the euro. Now, interestingly enough, that's kind of the opposite of what it's doing versus the Canadian. You can see that we're trying to establish price action outside of this channel. It's really struggled, and it's had a hard time really trying to break outside of it. But I'd say overall, it's done a good job of actually breaking out of the channel. It just hasn't been able to build upon that and really get a bullish uptrend going. However, I think that it's reached the point now where this actually looks like it's ready for a bullish turn and looks like it's ready to go up. So I would say this also looks positive for the US dollar. And maybe looks like it wants to rally from here. So actually, that's two charts that maybe look good for the U.S. dollar. And then finally, we have the U.S. versus the yen. And we've seen, again, some strong selling. And the U.S. dollar has weakened quite a bit versus the yen. But it's reached a pretty stable floor and found some buying today. And looks like maybe it's setting up to try to bottom out here and start to resume trying to make its way upwards. So, despite the fact that in the short term they all look a little bit different, and in the intermediate term they look very different, all of them actually look in the short term like they're ready to bounce, right? So this actually looks like maybe the U.S. dollar wants to rally over the next week or two. And if that's the case, then the bounces we saw in gold and silver might be short-lived. Here's GLD. GLD did a really good job of actually breaking above a pretty critical level, pretty critical long-term level. Right, and this was the point where we started to really establish a breakout from a longer-term downtrend. Around here, we're on 116 on GLD, and we're starting. We actually got back above that level off of a very strong move last week. However, if the U.S. dollar starts to gain traction again, then I think that this might be a short-lived breakout, and we head right back down. Now, if GLD can stay above this level, particularly if the U.S. dollar still is strong and this stays above this, then maybe it's time to say that we can start swing trading GLD and SLV again. Now, silver, it's not quite there. It actually has not really moved anywhere, and it's still kind of stuck in just this big mess of a range. But it might be establishing a bottom here. It did get above the 20 period and the 50 period moving average. But with the U.S. dollar looking like it's strengthening, I'm still kind of staying away from gold and silver for now. I don't think that they're really something that I want to trade. The other commodity we want to look at is oil, and oil actually has lost a bit of strength recently. As you can see, it lost this intermediate term trend line, showing that we lost a lot of momentum. Right, we were building up pretty strongly to try to get above 75. Luckily, or not luckily, but nice, it was nice to see that we failed at 80 or 75 and didn't make our way up to 80 again. I don't think that we want to see that sort of an impact on the markets yet, but we've lost ground here, and looks like maybe oil wants to sort of head down and maybe even test the 200 per moving average. And I think overall that's fine. I think it's still in the process of establishing a pretty nice range. Right, you can see we had this huge range that we spent a few years in, and we made our way up to 75, and we sort of stalled out here. I think it's in the process of establishing a new range, somewhere around 55 to 75. We're still towards the upper edge of that, so even though we're looking kind of bearish over the last week or two, I think overall it's still pretty bullish in nature, and a move down to 66 to 65 would probably be a spot where we could look at oil again and look at oil names as getting strong again. For now, a lot of those oil names we looked at last week are not doing that poorly. They're still doing okay because they're still bouncing a little bit with the markets, but they definitely sort of stalled out. And I think a lot depends on what we see here. If oil continues down to about 66, 65, then I think once we hit that level, those names will be good for a buy again. If we stabilize here at 70 and start to re-challenge the top of the 72 range, then I think those names will try to make a move as well. But I think for now, this looks like oil needs to maybe sell off for a few more days before it's really ready to go. Okay, that is oil, gold, silver. Not a lot of you guys in here today, but if you guys have any chart requests, feel free to put it in there. I'd like to see what you guys are looking at. If you have any names, I know that, again, the market's in an interesting spot today. So if you're looking at names, it could be that there's kind of a vague situation where you're not sure what to do with it. Let me know what you guys are looking at, and we can go ahead and try to analyze these charts and see what we can spot. I'll point out, since it's basically Patreon members in here, plus Blackhawk, this was what we were looking at yesterday, Mosaic, on our Patreon. And I think, again, this shows us a good example of what we should be looking at right now. It's a chart that hasn't broken down, it's still in a clear uptrend, and is basically consolidating and trying to set up a move, right? And you can see we've mimicking today's action. We've got this big sort of hammer candle, and I think if we can get above 133, then it should be off to the races. We'll change that like that. And so I think that this still looks good. And again, I think that this is what you guys should be looking for, are names like this. And, obviously they're far and few between right now, right? There's a lot of names that have taken a beating and are struggling, but there are still names like this that are doing well and that really are setting up for moves higher once the market stabilizes. All right, so Scott, Ron, Blackhawk, if you guys have nothing, I'll go through a couple of the names that we've had in our watch list, and then maybe we can call it a day. What I'm going to do is go through a lot of these names that I've considered and we've looked at through the past. And I think as we go through, you'll see that we've had some pretty good erosion in price action throughout the last few weeks, right? So what I'm looking at here, this is my watch list. A lot of these names are names that I've either put in or considered putting into our Patreon page. And you can see a lot of them have lost the critical levels they were looking at. BXMT was one that was looking, this was a good trade from from 33, but once it started to really roll over up here at the top, it was a stop out, and you can see where it's at now and what it's done. But this isn't really something I'm looking at trading yet. But it is nice to see that it's starting to establish price action again outside of this broad range that we were looking at before. This one's held up well, but I don't think it's ready for anything. Obviously, this one broke down and never really was able to establish price action. You'll notice a lot of these names probably need to just be taken off the watch list already. I have them on there just to sort of see what they've done. Keurig actually has done pretty well. And this is part of the reason why a lot of times I leave these names on my watch list longer than normal is I want to see what happens after, if they do succeed or fail in a range, to see what happens next. I think Viking is probably setting up for a decent move soon. Not really interested in this. It's a broadening, this sort of broadening action usually is not the kind of thing that you want to get too involved in. Right, we have this big broadening wedge. Typically, you want to see volatility die down before you want to go ahead and trade something like this. So you want to see it sort of do something like this. And then from there, it could be worth a trade. But for now, I do like that HCP was able to stabilize at 24 and bottom out and make its way back up. It's in the process of trying to finish this off, but I think it needs more time. But so this is one that's still worth keeping on a watch list and looking at. So Scott, you say you've been building up shorts and builders for the last 2 months. Show me, I guess, give me an example, or give me what's the ETF for the builders? Is it XL? I can't remember which one it is. I have a bad memory for those things. Prospect again. Oh, what I like about some of these names is that you can see that they're at support, right? And now this one's a little bit not quite as nice as what we've seen before because it's losing momentum, but it's one that I want to see establish a floor here, and then we can go from there. XLB, I'll look at XLB in a second. So you can see some names are still holding up pretty well and are worth trading. But obviously, a lot of names have broken down and are not in a good spot. Well, all right, I got a lot of names here, so we'll go to XLB now. All right, so that's pretty ugly on the builders. That's actually really ugly, much uglier than a lot of the markets. So you did find relative weakness, which is a good theme here. All right. Wow, yeah. Huh. KHB doesn't show up. Yeah, like so you've actually been shorting these, huh? That's pretty good, Scott. KBH, sorry. Oh, yeah. So you've been shorting these as they broke support, or where were you shorting these? That's pretty good. You've done a good. You know, that's the other thing. I don't normally discuss this because we've been in such a strong bull market that I feel like the predominant direction in not just the market but in everything is up. I used to short quite a bit, especially back in 2007, 2008, 2009, even like around, I think it was 2012 when the market was really, right before it really took off. Like right around here, when people were worried about a double dip, shorting to me was a really good strategy. But since then, I've really kind of stayed away from shorting because I feel like it's just the prevailing direction has been so strong to the upside that it hasn't been worth my time to try to find shorts. But you've done a good job here of finding the opposite of what I've been doing, right? Because I've been looking for relative strength and buying dips, and you found a nice pocket of weakness in the market, and you've been able to sort of capitalize as the market has started to really correct. So that's good timing on your part, and a good job of finding a good place to go ahead and take those shots. Nice work. And it's funny, I don't bring this up, but you're looking for relative weakness instead of relative strength, and taking advantage of where the market is right now. So that's actually that's a good thing to do. So yeah, that's pretty good. We got a bear flag here. So if the markets do turn around and retest their 200-period moving averages, this could resolve to the downside, and we could even head a little bit further. Look at these names. I'm going to look at all of them on a weekly chart to see where the real floor is, and I think this is a decent level here, but the real floor is probably all the way down around 50, 51. Let's take a look at the individual names on a weekly chart. I think we're getting pretty close to the major floor is probably 30 on Toll Brothers, so it's probably pretty close to that. That's been a pretty drastic move to the downside. So this move is probably pretty close to an end, as far as really cratering down. Definitely more room to the downside on KB Homes. I'd say 15 to 17 is a major floor, but this is a pretty strong level here. It's $20. And DHI. All three of them look like maybe this is about the bottom of the short term. This one also. So I'm going to draw. I'll go back and draw on all three of them. We've got this, right? Now there is another more critical level way down. I'd say somewhere around here. We'll just draw a zone, right? There is a little bit more room to the downside, but this looks like a pretty good floor for DHI right now, for DR Horton. And then for KB we've got this, and then we've got another level way down here. It sort of coincides with, it's kind of one of these moves where we're kind of dropping, then we tried to break out, failed, and then came up, and then eventually that level's where we were able to break out from. So this looks like a temporary stopping, pit stop area. But if this does resolve to the downside, there's a lot more room to go. But I do think that 21 to 20 is probably about where this thing wants to stop, at least in the short term. This one did accelerate. Did accelerate to the downside, right? So it's been pretty weak. But that's not too bad. And then let me see if... Well, yeah, this one I think is pretty obvious. We've got this long-term base at 30 that it's very close to. Also, another one that selling really accelerated, right? You can see it was sort of trending down, and then it just really picked up and really just cratered through there. So nice job on all three. I assume that you've probably taken profits on all three, or pretty close to. If not, this is probably you're reaching a point where most of them are probably going to bottom in the short term, and then we'll see what happens. If the markets continue to struggle, these things probably head lower, but they look like they're all approaching pretty decent floors in the intermediate term. But you did a really good job with those. I like what you did there. All right, guys. I think we can go ahead and call it a day today. I think because of where the market's at, there's not really that much to look at anyway. We'll see how we close today, how the markets behave from here to Friday. It is earnings season, and we have some decent names next week. So keep an eye on your earnings calendar. If you are going to take trades, make sure that you don't get blindsided by any kind of a report that you weren't expecting. Other than that, have a good rest of today. Have a good rest of the week, and we'll meet again next Wednesday.